Today we're going to take a look at this great monthly dividend paying REIT, Real Estate Investment Trust, the name of it being Realty Income. I've done my research from their website and other places and come up with these findings. Today's date being the 31st of May 2024. Realty Income, ticker code O. The current price is $51.17. The 52-week price range was between $45.03 to $54.18. So it's trading at the higher part of its price. The predicted upside price or target price of the stock is to rise to $61.38. This is from analysts. That's up from today's price of $51.17. Realty Income Incorporated is a United States-based investment company focused on the commercial retail market. The company is structured as a REIT and pays 90% of its income in the form of dividend payments. This is a condition of being a REIT, and there are tax advantages, but they must pay 90% of its income in the form of dividend payments. The company is known as the Monthly Dividend Company, a name it has trademarked, so it's a part of its selling or marketing strategy. It is a member of the S&P 500 and the S&P 500 Dividend Aristocrats Indexed, having increased the payment 117 times since its IPO in 1994. That's when the company went public. Since its inception, and as of December 2022, the company has paid 628 consecutive monthly dividends. Realty Income Incorporated is focused exclusively on freestanding commercial properties in the USA, UK and Spain. Unlike commercial REITs, Realty Income operates on a triple net lease basis, which means its tenants pay for taxes, maintenance and utilities. The company is incorporated in Maryland but has its HQ in San Diego, California. As of March 2022, the company owned 11,281 properties, enclosing more than 213 million square feet of space. So 213 million square feet of space the company actually owns and leases out, making it the largest REIT in the USA and internationally. At the time, it was worth nearly $40 billion in market capitalization, making it the world's 425th most valuable company. The company's top 10 tenants are Walgreen Boots Alliance. If you're in the UK, you know them as Boots the Chemist. 7-Eleven, it's a US based. Dollar General, Dollar Tree. FedEx, that's a parcel company which has a presence in the UK also. LA Fitness, they did have a presence in the UK at one time. Sainsbury's, which is a UK based supermarket chain, sort of getting near the higher end. BJ's Wholesale Club, and Walmart. The lineup of tenants ensures a steady stream of monthly income that allows the company to pay its monthly distribution. The company's CAGR, compound annual growth rate, this is the annualized average rate of revenue growth between two given years, runs in the range of 15%. So the income is increasing 15% per year since the IPO, and this is boosted by the dividend and its history of growth as well. The company was founded in 1969 by William and Evelyn Clark. Their first target was a Taco Bell, and since then they and the company have expanded into all aspects of commercial real estate. Hope you're finding this interesting. This is sort of my research and history and analysis of the company. The strategy was to target the real estate needed to operate a commercial business and then lease it back to the business. These deals are attractive to businesses because they provide needed capital while generating long-term occupation of existing facilities. Some notable milestones in the company's history are 1994 when it IPO'd, and then 1997 when Mr. Clark retired and a new era began. In 2013, the company made its first major acquisition with the purchase of Realty Capital Trust, and then in 2015 was added to the S&P 500 index and the S&P 500 Dividend Aristocrats Index. In the same year, in 2019, the company made its first acquisition outside the US with the sale and leaseback of some Sainsbury's properties in the UK. And as I say, if you live in the UK, you certainly know who Sainsbury's are. Tesco's a very popular supermarket, but Sainsbury's sit above them in sort of price band and quality band. And in 2021, it purchased Verit, which is another company. Analysts at the moment, 5 say buy the company stock, 7 say hold, and there aren't any who say sell. 70.81% of the stock is held by institutions. High ownership can be a sign of strong market trust in the company. As I say, institutions such as pension funds and hedge funds, they've got the time to do all the research, and they have obviously found something that makes investing in the company worthwhile. Earnings growth is expected to grow by 3.34% in the year ahead, from $4.19 to $4.33 per share. So it's carrying on earning. Price to earning ratio, PE, is 47.33. You can look at it another way. This is the number of years of earnings at the current rate it would take for the earnings to cover the cost of the stock, one share in the company. The market PE ratio is about 136. And the sector that this is in, the property sector, is 56.99. So the PE ratio is less in both cases of Realty Income. The price to book ratio, PB ratio, is 1.14. Anything below 3 indicates that a company is reasonably valued with respect to its assets and liabilities. Dividend, this is the most important thing, or one of the most important things. The payout is 5.91%, making it in the top 25% of dividends paying stocks. The dividend growth has been increasing for 32 years. So nice, consistent dividend payouts, which we're looking for as we are looking for income. The dividend is paid monthly, which is quite unusual, but very, very helpful. So this is Realty Income, and this is their website saying, we are real estate partners to the world's leading companies. We are geographically diversified and growing internationally. What have they got to say for themselves? We are a thoughtful consolidator of commercial real estate globally. We are the monthly dividend company. There you go. And they've got as a registered trademark. So that's Realty Income. Hope you found this of use. Till next time, I bid you a really successful investing adventure.